Oh, we got John on the line. Let's go to him. Sorry I took so long. I get to talking. Are you still there, John?
Good afternoon, David.
Hopefully you'll sit through the break for us. What can we talk about today?
David, I just wanted to follow up with a question on your lead-off idea, please. And thank you for sharing the idea about a bomb going off. First, I'll share two observations with you. One, I could see some damage occurring starting was last Thursday, the 1st, in the U.S. Treasury bond market when the bond futures contract broke a pivotal level up near 147. That led to selling down to 146 on Thursday the 1st, and that selling extended to 145 on Friday the 2nd, and then, of course, that carried through down to 144 on Monday the 5th. Second, we know when you've studied the Fed that January, or starting January 1st, rather, the Federal Reserve would be rolling $20 billion per month off its balance sheets.
That's the 20 billion. Yeah, that's the 20 billion I alluded to. Go ahead.
And I'm just wondering if you can explain what source of information you can go to, the New York Fed website, for example, or other, to see that 20 billion was rolled off all in one shot as compared to amortized over the span of an entire month.
Or a week even. We'll be back in just a minute. John, are you still there?
I am, David.
Okay. I first heard this on Friday, but wasn't able to get back and turn it around, and I don't know if it mattered. And really until Monday and Tuesday, we really didn't think. I first heard something through people that were looking at the NANEX data. That's NANEX, if you look at that. And I can't find his tweet. I thought it was his tweet. Also heard it from a handful of bond people on Friday and Monday. And just in the last couple of days, the McClellan guy, I can't remember his first name now.
Yes, that escapes me as well. I can't help you.
I want to say Tom McClellan, the son from the McClellan oscillator guys, was out actually saying it yesterday on Bloomberg, and I saw him saying it again today. So I've heard it from a variety of sources, but I think it originated from people watching the Nadex feed, which you do have to pay for. They may have taken off the screenshots. I kind of vaguely remember seeing it there on Friday. But a handful of other bond people, I don't remember their names on it, but I found some articles. And then McClellan, the last couple of days, showing up on Financial Infotainment, repeating that narrative. Sure. I don't know if you could know it's them specifically, but you could see somebody went in and sold them all at once. So maybe I'll go ahead and email Eric and see whether or not he's got something for us at NANEX where he can see. But those guys store every bit of data, including bids and offers that never execute. So you get to see literally everything that's on any of those electronic platforms. But
David,
I think
I appreciate that. Let me just, I'd like to share something for you and your listeners.
Okay.
I will tell you this. The story you've just mentioned, I've not heard. You're describing a situation where it wasn't hidden, but it wasn't easy to observe. Okay. That's noteworthy to me, number one. Number two, I will share with you this. Back from 2009 in through 14, when the Federal Reserve was doing QE1, QE2, Operation Twist, and then finally what everybody called QE to infinity, QE forever. During those periods of time and all those operations, when the desk, the New York Federal Reserve trading desk, would execute the committee's instructions on quantitative easing, the New York Fed desk would announce in advance when it would be doing its purchase of bonds, treasury bonds, and of agency and mortgage-backed securities. And it would announce the dates in advance, and then there would be an operation with a purchase. And so all that data was known in advance. And what I came to see and understand as a trader, David, back in that 09 to 14 time frame, one could observe the timing of bond purchases, the actual date and time. And then when that was occurring, one would see within a multi-hour window period of time a rally response in the S&P futures. And I was, you've heard me state this idea, I'm a slow learner. Well, case in point there, I never developed the quick skill to watch that QE operation and then buy successfully S&P futures. But I could see it happen after the fact, a couple hours after. So I became very well aware of that. What you're describing is a quantitative tightening move where the New York Fed desk doesn't pre-announce. And what I'll just share with you, we need to remember all this year, 2018, the committee, the Federal Open Market Committee, has instructed the New York Fed to withdraw or to roll off $20 billion each and every month. And if the New York Fed isn't doing it systematically and fully transparently, it keeps me alert to the idea that little bombs could go off at times I don't know when.
Okay. Yeah, I was looking for the actual time to find the link. I'll try to do it during the next break and see if I can't find up McClellan discussing it today. But normally I just look at the ticker at the bottom of it, don't pay much attention to it. Was kind of interested what he had to say because I do use the McClellan summation index a lot. So I just happened to turn the volume on when he was on. Normally I throw things at the TV. Anyway, he had kind of interesting discussion, but he talked about that more. And it's like the fourth or fifth time I've heard it, and haven't heard anybody negate that. And generally, anytime I hear it come from the Nanix boys, I kind of almost write it in stone from the time that they exposed all the flash crash data, because they literally have it all. But I will email him too. Maybe we get a response from him.
Well, I do appreciate you bringing up that topic. And for me as a trader, I will just merely tell you I am alert going forward to selling waves either showing up in bonds or E-mini futures at unpredictable times, since we're in a regime now in which quantitative tightening, 20 billion per month, is ongoing. So thanks so much.
You bet. Now, one of the things that's kind of interesting is the way that they did it, right? It's not, they could have done it all week long. There was nothing, or all month long. There was nothing that said that they needed to drop them all at once. On Wall Street, the traders call this firing for effect. That comes from I think some of the military background of some of those folks out there, where they didn't want to hit something specific. They wanted everybody to keep their heads down. And so they just loaded up every mortar and kept firing it randomly just to make sure everybody's heads were down. And that's kind of the question you have to look at, because nobody that wants to get out at a good price does it all at once. So you got to know that if that narrative is true, and I have no reason to believe it was not, now that I've heard several bond folk actually report it, and McClellan and the Nanix guys, or at least one guy from Nanix. That's it. Well, anyway, thanks for the call, and we will be back shortly.